Hi everyone, and welcome to today's market overview video. Today is Tuesday the 1st of November, and we are going to focus on three main markets today. We're going to look at the NASDAQ, gold, and crude oil. So let's take a look at the NASDAQ first. And we know that the NASDAQ has been in a downtrend since the start of 2022. We've got a downward channel that the market is still trading within. And if we zoom in a little bit closer, we can see that there's this support band where on the 16th of June we actually made our previous yearly low right at this point. And on the 13th of October we had a CPI report which came in a lot worse than expected, and it actually caused the market to sell off really quickly, as you can see by this long wick, but it ended up getting bought, and that's been the low that we've had since then. Now, if we just focus only on the technicals, we can see that this little support zone has actually been holding for quite a while. If we go down to a 4-hourly chart, we can see that there's quite a lot of buying pressure that comes in at that point. And with the Fibonacci retracements, we can see that at this point we're testing the 78% level, and we've kind of bounced inside of the this support zone and that 78% level. So regarding the NQ, there's really two situations that we can see from today's trade, and that could be either we're going to see a rally up through the 78% level where we're going to start rallying up to the 61% level. That'll give us 12,000 on the NASDAQ, and that's about a 423 point move from the current levels. If we still find some resistance at that 78% level, instead of us moving up to the 61%, we could come back down to test the 100% level of our Fibonacci retracements, which also coincides with, again, the previous yearly low that we had. There's a few ways that we could view it at this point, but it seems like the market may chop inside of this zone for a while until eventually deciding on either breaking above that 78% level, or this black line that I've put here, or eventually maybe breaking lower and then going down towards the bottom side of the downward channel. Gold has a bit of a different picture. We've seen a drop in gold mainly because of the dollar. The dollar is rallying quite a bit. This is because we still do not have any signal from the Federal Reserve that they're going to slow down on interest rates. We're still expecting a 75% basis point rise, and at this point any small rumor or anything that goes around that the Fed may slow down on interest rate policy causes a rally in the equity markets. But if we look at gold on the daily chart, and we can actually take a look on the 4-hourly, we can see that there was a head and shoulders that formed that actually ended up giving us the first target that was hit. This target coincided again with the yearly low, which we had at the yearly low for gold at $1,622 an ounce. Now the price already came up and tested the neckline at this point, and we've bounced off of that neckline. So this is very common with the head and shoulders pattern. It's a very strong reversal pattern, and you know, at this point now we have to wait and see whether we're going to see the price come back down into the support zone. And if we do come into the support zone, is there going to be enough buying pressure to actually push it back up? And if we do see the push back up, then we can expect the prices to rally back to that neckline again. At this point we've got a bullish engulfer that's forming, but it's still early in the session, so we can't really take this candle as much to go by right now. The two situations, or the two scenarios that I see playing out, is that if the price does rally into this neckline, we need to clear this level over here. We need to clear this level here, which is sitting at about $1,680 an ounce. If we can rally through that with conviction and get a close above that line, our next target would be at about the top side of the head from our head and shoulders, which is a nice accumulation point at about $1,700 an ounce. If the price continues to fall as we see the dollar rally, we're going to see prices probably fall right through this low, and this is where we're going to get kind of into uncharted territory. And if we look at a monthly chart, you can see to the left hand side there's really no levels to kind of go by, because we're already at the 2012 highs at this point. So the only other accumulation point that we see is this one over here. At that point we're looking at about $1,500 an ounce, which is quite a way away. So we'll just have to wait and see what the price does in the short term before we can make a play on that. Now if we look at crude oil is interesting because we've had a downtrend as well since about June, and this is also regarding the strengthening in the dollar. But we've kind of formed a small inverse head and shoulders, but that's not actually what I want to put our attention to right now. I want to take a look at first the parabola that we have. So on our blog, we've written a bit about the parabolic curve and how strong it can actually be if you find it, mainly because most traders and investors do not know anything about the parabolic curve. They've never seen the pattern before. But you can see here that our 3 connection points, if I just mark them all for us, is this is our first connection, this is our second connection over here, and then our third connection is at this point. The parabola can only work if you've got 3 connecting points, and it's very specific because if the third point, for example, does not link up really strongly with the first 2 points, you're going to see the parabola move quite a lot. But if we take a look at exactly how strong it's actually been holding, we can see that it's bounced off this parabolic curve many times. And at the moment, the parabolic curve is giving us a bullish formation in crude oil price. Now, if we do see it drop from here and the parabolic curve does not hold, then the first level that we would be looking for is just down here at the lows that were made on the 18th of October. And that's around $82 an ounce. So if I zoom in, you can see exactly the kind of lows that we're looking at. If the parabolic curve does not hold, we see the price fall from here. This is going to be our first target at $82 a barrel. If the parabolic curve does hold, what we have is the inverse head and shoulders formation. I guess we could make it from here as well, depending on how we want to look at it or the size that we want to look at it. It could be this side as well. Now, if we take a look at this formation and we extend the target up to the neckline, if we break through that neckline, we could see oil rally up to the $110 per barrel mark. But now we just need to keep in mind that we haven't seen $100 oil since July. So that's also, it's a very significant level. And with the uncertainty and volatility in the market right now, we just have to kind of play it a little bit cautious. But that's what we're looking at the current market overview.